Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a 10K report, so buckle up, it's going to be a bumpy ride filled with more twists and turns than your average soap opera. This blank check company is racing against the clock to find a business combination, and the clock is almost out of time. We will check if they will make it or not. Let's cut to the chase. This report is from Aimfinity Investment Corp 1, a special purpose acquisition company or SPAC. That's a shell company designed to merge with a real business, giving that business a shortcut to the stock market. They're hunting for a target in the tech, hospitality, or consumer services sectors. They've been playing the extension game like pros. They had to get shareholder approval multiple times to extend their deadline for finding a merger partner. Each extension cost them money deposited into a trust account, money that is used to incentivize shareholders to stick around. They originally had until July of 2023, but now after a few extensions, they have until October of 2025 if they pursue all monthly extensions. That trust account has been shrinking with each extension as shareholders opted to redeem their shares. Now for the main event, the Doctor business combination. Aimfinity wants to merge with Doctor Inc., a company that has developed a non-invasive blood sugar monitoring technology. They make watches, track vascular elasticity, and even try to predict heart attacks. I wonder how well these watches will hold up over time because there is a lot of competition in this field. So how will this all work? Doctor's shareholders will get 6 million shares of the combined company. They could also get up to 2.5 million more shares later if the company hits certain sales targets, 30,000 devices in 2026. It sounds like the success of this merger will depend on how many blood sugar watches they can sell. To help make sure there's enough cash on hand, they've got a backstop agreement. This means that if too many Aimfinity shareholders cash out their shares, a backstop investor will step in to buy more shares, keeping the company above a minimum cash level of $5 million. Insiders are also converting their debts into equity. Promissory notes worth almost 1.5 million are being converted into private units of the company. This will make sure the insiders get a piece of what's left. Here's the official word, they are a shell company. This is common for SPACs before they find a real business to merge with. The market value of shares held by non-affiliates was roughly $50 in $6 million as of June of 2024. 1.7 million Class A shares were outstanding, including those tendered for redemption, and 2 million Class B shares were held by insiders. There's a warning here, the auditor's report raises substantial doubt about Aimfinity's ability to continue as a going concern. This is because they need to complete a business combination within a certain time frame, or they will have to shut down. Management admits they expect to keep burning cash as they look for a company to acquire. They're hoping interest income will offset these costs, but that's not a guarantee. For 2024, they had a net income of $1.2 million, which they said was because of interest earned but offset by operating costs. For 2023, the net income was $1.9 million. Sounds like the business is getting worse. As of the end of last year, they had a measly $4,805 in cash and over $3 million of a cash crunch and need a merger fast. The filing also mentions some risks, including whether the company can complete an initial business combination. Ducks the to now let's zoom out and look at what all of this means. Here's my take. Aimfinity is in a tight spot. They are running out of time and money. They are relying on Ifa Chang, the manager of their sponsor, to pump money. The fact that the auditor is warning about their ability to keep going should be a huge red flag. This Doctor merger is their Hail Mary to actually merge. I am not really sure if this is a good match. It seems like there will be a lot of pressure on Doctor to actually make these smart watches, to sell a lot of them to keep them going. Doctor has a long road to hoe. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, remember to like, comment, and subscribe for more insightful financial analysis. What do you think about SPACs? Leave your comments below. See you next time.